One earnings season ends, another earnings season begins. I'm talking about off-cycle earnings season here, where all the companies with wacky, non-standard fiscal years report their numbers, like most of the cloud plays. If you've been paying attention for the past couple of years, you know the cloud-based software cohort has been one of the hottest groups in the market. Sure, sometimes these stocks sell off like they did during the big market-wide meltdown late last year, and sometimes after each quarter, I don't know. They usually come back with a vengeance, which is why we're so focused on them. There's just one problem. They're almost impossible for the layman, meaning you or me, to understand. When you try to read descriptions of their businesses, they're loaded with buzzwords and technical jargon, go-to-market strategies, scale, whatever. Unless you have a computer science degree, trying to process this stuff is like bashing your head against a wall. And that is really unfortunate. You should never own the stock of a company you don't understand. It's too risky. You won't have a clue what's going on, particularly when it goes down. But the gains in these cloud names have been so spectacular that I hate for you to miss out. And that's why tonight and tomorrow, because there's so many of them, I'm going to give you a primer on the best cloud-based software companies. And it's going to be in plain English. You do not need to have gone to Stanford Computer Science. And you'll, after this, know what the heck these companies do when we mention them. So tonight we're going to start with one of the ones that already just reported. Then tomorrow we'll do the rest. Okay, we're going to do all the ones that reported. Let's start with Splunk, which just reported, and the numbers look pretty darn good. For those of you who don't remember, Splunk's one of our original cloud kings. They're in the data analytics space, specifically machine data. Basically, they take the unformatted, unstructured data that's constantly thrown off by connected devices and show their customers how to learn things from it. They turn digital trash into digital treasure. No wonder the quarter's a blowout. CEO Doug Murray is his perb manager, and in a business that is pretty cutthroat, I've never heard a word that was bad about him. He's loved. All right, how about Alteryx, which I just recommended last night? This is another rapidly growing analytics play. Basically, their technology sits in the middle of your data ecosystem. Their platform doesn't care where the data comes from or where it's going. It's like a very efficient pipeline between inputs and outputs. Like I told you yesterday, the numbers here are just stunning. But I don't want to chase at these levels. Got to wait for a pullback for Alteryx. Next up, there's ServiceNow. John Donahoe, remember him? He's great. The original cloud kings. Here's a company that's in the business of creating so-called digital workflows. In plain English, ServiceNow software helps other companies automate all sorts of back-office processes, allowing them to run much leaner operations. This is another labor-saving technology. Remember, these are deflationary companies. When ServiceNow reported at the end of July, the numbers were better than expected, but apparently not good enough for Wall Street because the stock had run so much and it got slammed. Since then, it's continued to fall. But when we last spoke to the CEO, I thought he told a very compelling story. I like ServiceNow at these levels, and I'm not the only one. The stock caught an upgrade from Stifel this morning, and it exploded higher, up 4% today. It has room to run, though. How about Twilio? You've heard us talk about this one. It isn't just a software as a service play. It's a cloud-based communication platform as a service. What does that mean? That sounds like total buzzword, right? Okay. Other software developers use Twilio to add capabilities like text messaging and voice communication to their apps. If you use Lyft or Airbnb, you've probably gotten a message that was enabled by, yes, Twilio. Plus, now they're trying to do something similar for call centers, replacing their outdated software with a more flexible system. It makes it easy to automate this stuff with bots and automated voice responses. Twilio is another fabulous company, okay? I like these guys very much. Mr. Lawson, Jeff Lawson, I just met with him again on the floor with his family in the New York Stock Exchange. I said, Jeff, how you doing? He's fine. I mean, we didn't talk business. He just brings great joy to me, frankly. I think he's an original. He's taught me how to code. Well, somewhat. Now, the stock has been crushed by the recent market-wide turmoil. To me, you know what? That's crazy. This story is better than it was a month ago, yet the stock has fallen from 147 to 131 during this period. That's why our Charitable Trust has been buying. It's a small position, not big. You can follow up by joining the ActionAlertsPlus.com club, but I think this guy's the real deal. I like it that much that we had to buy some shares. I wish it would come down more. You'd do some more buying. Twilio. Love it. How about one that people make fun of me because I say it all the time at the office, Atlassian, simple team. Atlassian is another communication software play. But rather than helping companies connect with their customers, Atlassian helps employees collaborate with each other. It's not unlike Slack. Someone accused me of liking Slack the other day. Okay, so Slack stock is down. Shoot me. I think Slack's a good company. New Microsoft Teams chat is also kind of like this. The difference, though, Atlassian specializes. Their platform is specifically designed to help software designers collaborate more efficiently and effectively. While they've moved into other areas, software development is still the bread and butter. Now, Atlassian's latest quarter was so strong that the stock barely got dinged in the big sell-off. It's currently down about $6 from its all-time high, and that may be the one problem. Atlassian stock's expensive. I would not buy it at these levels, but I sure wouldn't sell the whole position if you owned it. And now, if you don't, well, you wait for a pullback. It's fine. This one right here I like. Okay, just so you know, this one right here I like. I like this one. This one's too high, and this one's too high. Let's keep going. And this is the highest one and the hottest of all. It's a company called HubSpot. I've not talked about it on the show. HubSpot is all about inbound marketing. HubSpot offers a free customer service platform, The Hub, where its clients can manage their customer relationships. Then it charges those clients money for additional products to help with marketing, sales, and service. These products help ensure that their clients target the right customers. They make marketing more targeted. Again, HubSpot's latest quarter was phenomenal. Stock has been a juggernaut. Today it reached $200 for the first time, closing just below that level. Like Atlassian, I think it's too late to buy this one, but if you can get a nice pullback, it's absolutely worth owning. Although if it did pull back, I bet you someone would like to buy them. A real company. It's on the buy list of every single growth stock manager out there. HubSpot. All right, how about one that's just stumbled recently? It's been on the show a lot. New Relic. New Relic is problematic. These guys help their clients make sure that all their web pages and apps are working quickly and correctly. I don't know if you're on that MLB one that I was before the Phillies got bad. I'm constantly looking at it. That's a New Relic. Anyway, they flag issues as soon as we beat the Red Sox last night, 3-2. They flag issues as soon as they pop up so they can be fixed ASAP. It's a great story. But when New Relic reported their latest quarter, the guidance was widely seen as disappointing. It was a tough conference call, and the stock got clobbered. It lost 29% of value in a single day. Since then, it's kept falling. It's now lost more than half of its value since the peak last summer. Now, I am a big believer in CEO Lou Cerny, but, we got to hear from him before I say, hey, step up and buy some New Relic down here. Who else? Oh, boy, here's one that we had on recently. It's hard to keep track of. It's called Five9. It makes cloud contact center software. Basically, they're trying to make physical call centers obsolete. People should be able to do this stuff from any office or from home and do it more efficiently. Five9's another one that's on fire. I do not recommend chasing it. Again, put it on your shopping list and wait for a pullback. I thought they told an exceptional story when they were on recently. Similarly, you've got another one that told a great story when they're on, RingCentral. And that provides other companies with a cloud-based business telephone system. Rather than having the phone company wire your office, you can plug your phones into this internet. And RingCentral, how can I help you, handles everything: voice, video, messaging, collaboration. Plus, their software makes it easy for users to log in with the same identity across multiple devices and locations, including their own personal phones. I wish they made logging into my fantasy draft a little bit easier, because then my executive producer wouldn't be sweating the program. But they do not do that. Okay, again, the latest quarter was fabulous. The stock's been on fire. Don't try to chase it. Wait for a better opportunity. And then one more. A favorite of Heather Gaines, who works with us, who knows more about these companies than anyone I have ever met, Zendesk. Think of this company as a baby Salesforce. They help other businesses handle customer support. When you call them with a problem, their platform makes it easy for support reps to answer your questions quickly, either by text or by phone. And Heather's always telling me, please do not confuse Zscaler, Okta with Zendesk, because they're very different. Lately, they've also been moving into data analytics and Salesforce automation, another labor-saving technology. Unfortunately, when Zendesk reported its latest quarter, they merely met expectations, and the stock got slammed. The good news: Zendesk seems to put in a bottom here, and this is one of the few cloud stocks that I would count on buying right now. Finally, there's Appian, which is thankfully pretty straightforward. Appian is like the way. Appian helps other companies develop software applications. They're all about what's known as low-code development. That's me. I'm a low-code developer. Their platform makes it easier for programmers to make tools without doing a lot of coding. The stock's been a laggard, but in the last few weeks, Appian's become one of the best performers in the cloud cohort, in part because the latest quarter was so fantastic. But with the stock up more than 50% in less than a month, I don't know. All right, the bottom line: too many people are missing out on the great gains in these cloud stocks, okay? Too many. Look at it. We had that Splunk. Normally you don't have like 11, right? Dirty dozen, Big 10, 11. football players. 11 on a team. No, it's not a baker's dozen. That's 13. No, it's 11. It's a gridiron because it's a fantasy draft night. Anyway, these are cloud players that now you know what they do. When you're finished with the tutorial, here's what I'm going to do. I'm going to create a cloud ETF for you that might actually be worth owning, but only if you understand what the underlying companies are all about, and then someone's going to steal it. I'm going to call it the IDK, which means I don't know. Someone's going to steal it, make a fortune on it, and I'm going to sit here just crying in my beer, which, by the way, is not going to be a IPA. Let's go to Paul in Colorado, please. Paul!
Jimmy, thanks for taking my call.
Of course.
I'm a big fan of your show, and I want to give a big booyah from Denver, Colorado.
Okay, go Broncos, although I don't like the way Freeman's... We have to do work on that. What's up?
All right, so I'm not crazy about the cannabis stocks out here in Denver, but I am interested in a stock called Zscaler.
Well, who isn't interested in Zscaler? I mean, other than like Coupa software people. Okay, Zscaler is a company like CrowdStrike that's really built for the cloud and security. And I think it is terrific. It is one that we've had on air. I think they bring great joy to the cloud. All right, knowing what you own is key, not Keysight, which reported a blowout quarter, but key and not Key Bank. Key! That's why I'm focusing on what explaining these companies actually do, so you can take advantage of their gains.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.